Okay, hello. Good evening, ladies and gentlemen. I am tonight's entertainment, and today I'm going to explain the setup that I've been developing that is based on my indicator. Um, it is the three candle setup, um, and I will show you guys the stats and everything from it. But it's been going really well. I'm going to explain the rules of it, how to use it, and how you guys can implement this in your own trading without my indicator. So, target, blah blah blah. You guys have seen me do that. So I'm going to explain why I do that and how it works, and I'll go over some examples as well. Um, so yeah, let's get into it. So basically, um, you have to have a stock that has breaking news, okay? Um, and at the time of the setup occurring, the 5 minute dollar volume should be within the top three of the entire market. So get yourself a scanner that tells you the 5 minute dollar volume. That's how I use. That's how I determine if it's basically if it's obvious at the time. So today I learned that Ross had a red day and BNAI had breaking news, and this was an obvious stock. So I'm gonna explain how the setup works. So you must have breaking news, and basically you're waiting for the first the first candle to touch the lower VWAP band, and then that is when you can have a possible entry. So in order to determine if it went high enough for the pullback, you have to have made separation from the bottom of the candles and the lower VWAP band. And then on the 10-second chart, you should have separation, like space between the bottom of your candles and the actual VWAP band, which is the blue line here. So in this example, we have both, right? We have separation between the bottom of the candles and lower VWAP, and we have separation between the bottom of the candles and VWAP. And so you're waiting for it the first time for it to touch the lower VWAP band. So it does it right here. Now, the way that I calculate my entry, stop, and take profit is exactly the same as my indicator. And also the way that you get the signal in the first place. It's pretty much the exact same. So the way it works is on the first candle that touches the lower VWAP band, or comes very close to it, like in this case, it came very close to it, you are waiting for the next candle to close above the low of the first candle that comes really close to it. So the reason I'm saying it came really close to it is because if you look at here, I mean, it's basically touching it. But anyway, so, and obviously it came nowhere near that before. So this is the first time it's coming to the lower VWAP band. So you're waiting for this candle that comes really close, and then the next candle, if it closes above the close of the first candle, then you have the possibility of an entry. So let's say this is happening in real time, okay? So I see this candle, I'm like, okay, cool. Now are we gonna close above it? Then we do close above it. So now I'm interested. I mean, I was already interested here because I assumed it was gonna bounce. So what you do is you take the ATR value, which is in my chart, it's right here, the red value. It's 0.9394. It's pretty small for you guys, but it says 0.9394. Okay, so right now the ATR is 0.9394. Okay, now that I have that, I'm waiting for a candle to close above it. So there we go, it closed above it. Now is when I can start calculating where my gray signal profit target would be if I were to get the indicator on this setup. So in order to do that, you take 0.9394 and you multiply that by 2.4. So ATR x 2.4 is equal to, now I'm going to pull up my calculator on my phone. 0.9394 times 2.4 is 2.25, okay? Now, you're going to take that 2.25, and you're going to add it to the close of bar 0. So in my indicator, this would be bar 0. You're going to add it to the close of bar 0, which, as you can see or not see if it might be too small, is 28.03. So I'm going to click equals for that 2.254456, and I'm going to click plus 28.03. And so now this is where I write target. So in my videos you'll see me write target, and this is where I write the first target. So 30.28. Okay, so there we go. Now I have my gray signal target. Okay. Now, like some of you guys know, there are 3 different path entries with my indicator. The first one is the momentum path, the second one is the red bar breakout path, and the third one is the bar 3, the weak bar 3 breakout path. This example, it ends up being the first path, which is the momentum path. So here's bar 0, here's bar 1, and bar 2, if bar 2 closes red, it'll most likely come back down. Oh, by the way, the stop, I should mention that the stop is calculated by taking the ATR and subtracting it from the close price. So if I go to 0.9394, 28.03 minus 0.9394. Your stop is 27.09 initially, the gray stop. So stop is at 27.09. Okay, so your original gray stop is at 27.09. So here's bar 0, then there's bar 1. If bar 2 closes red, this one right here, this little green one on the end, if that closes red, then the chances of it coming back down and you not getting an entry are pretty likely. But in this case, it closed green, so let's go ahead and continue this example. So bar 2 closes green. Now you're looking for an entry on bar 3. So bar 3, since bar 2 closed green, you're waiting for it to go up at least 0.3x your ATR, and then you buy immediately. So the way it works is that I see bar 2 is green, and now I'm typing in my amount of shares that I would use for the path 3 momentum. So 0.9394 times 0.3 is equal to 0.2818. So I'm waiting for this bar to go up 28 cents. So let me write that down here. 0.3x ATR is equal to 0.28. So I'm waiting for bar 3 to go up 28 cents, and then I'm buying immediately. So it opens at 29.24. And if you add that 29.24. So I am buying at 29.52. So let's put this. I'm going to buy at 29.52. Okay. So now that I've bought at 29.52, I've used the amount of shares such that if it went down by 1.3 x the ATR from my buy price, I would be risking 1R. So let's calculate my stop now. So there's where I'm buying at 29.52, and I'm using the original gray signal target price because it is the path 3 momentum. That's just the rule of this entry. So on this example, you're hitting your target immediately. So you're buying at 29.52, which is right here, and your profit target is at 30.28, which is all the way up here, and you're getting a win automatically. So there's the setup that I missed for today, just because I woke up with a fever in the middle of the night, so I took off trading for the day, and I took off work for the day. So there you have it. Now let me calculate my stop. So it would be 1.3x the ATR, so 1.3 times, actually let me just subtract it, so 29.52 minus 1.3 times the ATR, which is 0.9394, and so your stop is going to be at 28.9 or 28.3 basically. So you're buying here at 29.52, and your stop is 28.3, which is all the way down here, and then your profit target was 30.28. So basically, you do have to recalculate your stop loss, but for me, it's pretty. I mean, I was gonna say, like, you don't really have to, because you can just look at your open P&L and you're risking 1R every time, right? So it's up to you, but yeah, you calculate your stop for this path. For the path 1 momentum entry, your stop is 1.3x the distance from your entry price. Okay, so there's one example. Now I'm going to show you, I'm going to walk through all the other examples so you can see how to calculate everything. So on EVTV on the 4th. So EVTV on the 4th. Okay, so here we go. Here's the first, so breaking news. Here's the first candle that touches the lower view up band, which is the green line here. And now I can start calculating for my entry and my stop and everything. So this example is going to be the red bar. It's going to be the path 2 red bar breakout setup. So let's walk through the steps again, okay? So I see the bar touch lower view up. I get the ATR, which over here in the bottom right is 0.0798. So what the hell? Okay, weird. Okay. So I'm right here, and I go like this. Well, first I wait for this. I don't even know. That's not true. I don't wait for the candle to close above it. I start calculating it automatically because it's faster. So I'm going to type in original, or I'm going to type in ATR. 0.0798. Okay? Now this candle closes above it. Now great. Now we can look for an entry. So bar 0, and then bar 1 closes above the close of bar 0. Great. Now let's find the original gray signal target. So we're going to multiply this by, so 2.4x ATR is equal to 0.798, or sorry, 0.0798 times 2.4 is equal to 0.19, and then you're going to add that to the close of bar 0, which is 2.59. Your target, your original target, so I'm going to write that down. Original gray signal target. And the reason we're writing it on the original gray signal target is because if path 1 momentum happens, you're using this target. If not, you're changing your target. But 2.78. Okay, great. 2.78 is the original signals target. So now, is it bar 0, bar 1, and then bar 2 ends up closing red. So when bar 2 closes red, usually it'll just go down further and you won't end up getting an entry. In order to make sure that this actually didn't stop out, what we're going to do is we're going to check the original stop out price. So we're going to take the close of this and subtract the ATR. So 2.59 minus 0.0798. The stop out price, so the original stop is 2.51. Okay, so as you can see, it did not hit 2.51, so the setup is still valid and you still wait for an entry. So it closes red bar 2. Now, red bar 2, the only path that you have available to enter now is if you get a break above the high of this candle. So what you're going to do is, you're waiting. This candle does not break above the high of this, so you're still waiting. But then as soon as this candle breaks the high of this candle, you're buying. So 2.64 is the high of this candle. You're buying at 2.65. So 2.65 occurs, and in the meantime, while I'm waiting for the entry, so while this green candle is forming, or actually, well, basically starting halfway through the red candle, if I see that it's forming to be red, I'll start calculating my profit target and my stop loss for the red bar setup. So you are taking 1.6 x ATR, which would be 0.0798 times 1.6, so 0.1278, and you're adding that to one tick above the high of the red bar 2. So you're taking this plus 2.65 instead of 2.64, which is the actual high, and now your new target, your new profit target is still 2.78. So it just happens to be, it just happens to be the same in this case, but it doesn't always have to be. So now your new target is 2.78, and your stop is going to be 1.0 x the ATR from the entry price of 2.65. So 2.65 minus 0.0798. So your stop is 2.57. So once you enter at 2.65, your stop is 2.57. So then you're going to type new stop 2.57. Great. Now you have your entry, which is 2.65. You have your new target, and you have your new stop. And there you go. The trade ends up being winner, of course. This one, during live trading, I ended up missing it because I was watching something else that actually got my indicator signal. So I was watching my indicator signal, since my win rate is higher on that. But yeah. So there we go. There's a red bar 2 example. Now I'm going to show you guys a bar 3 breakout example. So on, let's see, bar 3 breakout, PDYN. That's fine. Okay. Okay, perfect. So here's the breaking news at 7 a.m. You're not including this because there hasn't been separation between the bottom candles of VWAP and, or sorry, the bottom of the candles and VWAP on the 10-second chart here. So as you can see here, there is no separation yet. There technically is separation here, but again, it's very minimal, and then there's no over here. So you're still waiting, right? It comes up and then it comes back down. Now you're checking to see if there's separation here. So there is separation there, and there has been separation here. Okay, So now it's valid. Now your entries can be valid. So what you're doing here now is you get that red candle, and boom, now you can start calculating. So let's see, ATR is going to be 0.1607, 1607, and then 0.1607 times 2.4, and then you're going to add it to the close of this bar 0, which is 7.21. Okay, so your original target is going to be 7.595. Okay, now your original stop is going to be the close, which is 7.21 minus the ATR, which is 0.1607. So the original stop is going to be 7.05. Now remember, if this happens and then it comes down to 7.05, the trade is invalid. You no longer have an entry. Okay, it's invalid. You have to wait. So there we go. There's that. And now here we get the close above this. So now I know I can look for an entry. And then bar 2 is green, right? So now that means we can start looking. We start typing in our shares and getting ready for the momentum entry, right? For if bar 3 goes up at least 0.3x the ATR from the open. But bar 3, as you can see, is red. So now what we're doing is we're waiting. So it's red. It's not only is it red, it didn't go up 0.3x the ATR. So as soon as this candle forms, or while it's forming, since I know, like, as soon as I know it's gonna finish green, is when I'm starting to calculate 0.3x the ATR, which is 0.1607. So you're waiting for it to go up 5 cents. So it opened at 7.5 and it only went up to 7.52. So it did not go up 5 cents. So you're not entering here on this candle. Okay. Then you're waiting for a break above it. So it goes down here. You're still waiting. You're still waiting for 7.53 to buy. Okay. So in the meantime, you're calculating this. So you're doing 1.6. So your new target is going to be 1.6 times your ATR, 0.1607, and then you're going to add that to one tick above the high. Remember, you're adding it to one tick above the high, so 7 plus 7.53 instead of 7.52. So your new target is going to be 7.79. Okay, and then your new stop loss is going to be 7.53 minus 0.1607. Your new stop is going to be 7.37. Okay, so again, now you just wait until a break above 7.53, and there you go, you buy, and it hits your profit target up here at 7.79 on its first candle. So the high of this candle is 7.81. You hit it right away on this candle. There you go. That's how you calculate. That's how you calculate the 3-candle setup. It's based on the AD divergence 3-path system that I've created. I'll show you guys the stats for it so far. So if I go to TradesViz, so it is where is it? Why is it not oh, there it is. Okay, lower VWAP first 3-candle setup. So ever since I started, setting hard rules for it and creating, the hard rules that I just showed you guys where it needs separation and all that stuff, I've had a 70% win percentage on it, with a total percent return of 28.45. and a P&L of $763. So this is, of course, in addition to my actual AD divergence, which have made this much with the 60% in the past 2 weeks, basically. So yeah, I've really locked those rules down. The other type of rules that you need to keep in mind when you're doing this is that you can only trade. So for example, if this green bar went past the profit target, the original profit target of 7.59, then your entry is no longer valid, right? Because you missed out. But then it came back down again to the lower view up, then you can still enter. You still have that option to enter. But you can only trade one of either the 3 candle setup or the AD divergence pattern per stock. So since we already traded and got a win on this one, since there was already one setup on this, then you can't trade the AD divergence pattern later on if it were to get a signal, but you don't end up getting a signal until all the way back here. So, and even then you don't get an entry. So yeah, so you can only trade one of either setup per stock, whatever comes first. Basically, you're trading whatever comes first. And then that's pretty much it. I think those are all the rules that I have. So that's gonna do it. I just wanted to check in and explain why I wasn't here today. I'm still sick, kind of. I don't know, it was weird. I got a fever for like 2 hours in the middle of the night, and then I woke up mostly better, but still sick, but it's weird. Okay, that's gonna do it. I will see you guys tomorrow. Peace.